Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, June 8th. Mike Boutros with you on the horn. Great to be with you guys this morning. Jay, Steve, welcome to everyone in the room. It's been a slow start. Looks like markets are kind of going into a holding pattern. We do have a lot of event risk on tap, not only this week, but obviously heading into next week, we got the FOMC on tap. So everyone's going to be looking to see whether the Fed actually reacts to this seemingly surge that we're seeing in inflation. And that's sort of the focus. So for today, we do have a couple of things. It's been range bound for the most part, but the levels are actually clean. So we're going to take a look at DXY, inflation on Thursday, Euro, ECB on Thursday, Kiwi dollar, dollar CAD, got the BOC on tap tomorrow, dollar yen, gold, sterling, Aussie. Definitely take a look at Bitcoin, has been picture perfect on this decline. And obviously take a quick look at the SPX as we push through to the highs here. Any other questions or trade setups, guys? As always, feel free to throw them on the message board at any time. Here's what we looked like yesterday on the DXY. So this pitchfork has been pretty decent. A slight adjustment, as I noted from last week's slope, just the tail end of that out to that late month low we made last month, but looks pretty good. The focus has been on yearly open support, 89.93. I've been talking to you guys about this for 4 weeks. Actually, this would be the 6th week. It's the objective yearly open. We haven't marked a weekly close below it. Key resistance 91, period. Okay, that's the weekly chart. DXY in the daily chart looks like this. You're setting up the monthly opening range. Here's your monthly open. Here's your monthly low at the February low day close, which is the low day close of the year. That's where we bottomed last month. This month, we start off the February again, February low, catching the low. Here's the high, reversal. Monthly open support is just lower. So you have 89.93, which is the yearly open, 89.81, which is the monthly open. You'd need to see some support here soon if this is going to work. Here's what it looks like on the intraday chart. So that slope is pretty good. An interesting tidbit, if you take a 618, or if you take a retracement rather of the recent rally, the 618 actually converges right here on the yearly open. Here's the reaction we got last night. Bounce. This is still key support. Remember, just lower, you have the monthly open, and that's in line with slope. So all things held constant, it's not out of the woods yet, right? We still need to see some sort of support hold here, a breach above the objective weekly range high, that's 90.30, would be the onset of the resumptive move. So your initial focus right now into the start of Tuesday trade is a break of this key range. Ideally, 89.93, 90.30, but even if it dribbles lower, watch for support. Again, let me just add it for you. At the monthly open. So like right here, a little bit lower. So even if we dribble here, watch for a reaction. Anything sub 89.81, I wouldn't even risk it. I think this thing would probably likely give you a free fall trade if you break the monthly open, but this is a very important range. Again, got a lot of event risk on tap. Just heading into Thursday, you do have core inflation data out of the US. Inflation, like I've been saying, has been sort of the main theme that markets have been running with. We are expecting year on year to uptick from 4.2 to 4.7, right? That's the expectation. So again, remember, when we're trading these announcements, it's always what you're trading is the deviation from the expectation. So if we get a 4.8 click, that would be, in my humble opinion, pretty dire. You'd see some pretty strong market reactions. 4.6 and lower, you know, you might see a muted count, especially since the Fed is on tap next week, but we'll be addressing that one on Thursday's webinar as it comes out. So hopefully we can get some play there. Any questions on DXY? So it needs to hold support basically 89.83, 89.81 into 89.93. This is the zone that needs to hold. Topside breach above 90.30 needed for resumption. So before we jump into all the FX pairs, I do want to just take a look. I've been getting a lot of positive feedback from you guys liking to look at the yields. Here's what it looks like on the 10-year. I've been showing you this chart nonstop, every webinar for the last couple of weeks, guys, on Daily FX as well. The main level we talked about, and it wasn't a popular trade, was 152. We're testing that now. Watch for a reaction here today. The slope has been pretty decent. It's a break of the lows, break of the median line. This is the 618 extension of the decline off the yearly high. And it's also the swing lows that you made into the open of April. So if we close below this slope, a couple of levels to keep in mind. 148 is going to be the 100-day moving average here, okay? Just lower, you have slope support, 2 equal legs, which is, again, something I noted with you guys last week. Not a popular call, but it's 141. If this is just a corrective move, which my assumption is that's what it is, you still risk a drop towards the 41 handle. So it's a pretty dramatic drop that we're seeing here today. Here's what it looks like. Let me show you the 4-hour chart with that slope and context. So we can kind of dump these levels at this point. And here's the extension. All right. Watch for a reaction here. Now, at the same time, real quick at the VIX. So it's still pretty tight at the lows. And what I just wanted to note here is that if we do dive for another break for a new yearly low in the VIX, man, it could put the real damper on volatility, guys. So watch this as it happens here today. I think, again, this is not too surprising heading into major event risks, especially with the chain that we have. Again, BOC tomorrow, ECB the day after, core inflation. Then heading into the later part of the week, you get Michigan consumer confidence. Next week, retail sales, Fed, it's loaded. And the markets are kind of in a holding pattern here. So keep your eye on this. It's a pretty dramatic slope. So we'll see if we can hold it. That's a quick look at the VIX. Now let's dive into the rest of the dollar crosses. The ECB, like I said, is on tap this week on Thursday. Here's what Euro looks like. Here's the weekly chart. We talked about this yesterday. We got a decent reaction last week with that reversal candle off of the 2211, 2218. It's the 786 of the yearly range and the high week close for the year. We're just in a holding pattern below resistance. So think of this. By the way, this is also, again, the yearly open is right up here. I'll show you that in the daily chart in a moment, but we're basically there now, right? We're just checking yearly open resistance, the same exact trade as DXY, no surprise on that. Here's what Euro looks like on the daily. Okay, last week, talked about that divergence into key resistance, yearly open, that's a 618 extension from the advance off the low, 2265, 2240, it's exactly where we tapped out. Here's the move lower. Monthly open resistance, 2223. I kind of want to see failure there if this is going to work for a move lower. One thing that's been, I don't want to say it's a bit alarming, but if we take an extension just off the high to measure this move, that's the 100. I was looking at this yesterday. So is this some sort of real shallow correction we've just completed? And we're right onto the resumptive move. First of all, you don't get resumption until you clear 2265 right here. Let me drop that marker down. That's the resumptive move on a daily close basis, a break of last month's high and the median line and the 618 extension. But the near-term outlook, right, for the exact sort of structure that we're looking at now looks like this. And I think, so no change to any of those DXY levels. Here's what Euro looked like last night. So again, 2 levels I noted, 2204, 2223, both levels of interest for possible exhaustion if we are still heading lower. I'm still thinking the same thing. That's the monthly open, real nice convergence there with slope, okay? And again, here, I would kind of scratch the February high day close. It's been a decent pivot, but what I do want to focus on is just the objective weekly opening range low, and that basically gives you your resumptive track. So looking for failure into this zone if we get it today. Need a break below 2145 to mark the resumptive move for a move lower in Euro. Questions on Euro dollar. ECB is again on tap Thursday, not expecting any change in rates. Again, it's always the commentary that's gonna kind of move markets here. But we'll see if Euro's got anything left here. If it pushes up one more punch into 22, I'll be looking for a reaction. Last but not least, from last night's update was Kiwi dollar, and here's what Kiwi looks like. It's been an interesting setup because the whole thing has been this major coil below weekly resistance, and that's kind of been the whole focus for me on the New Zealand dollar. You got no event risk out of Kiwi or New Zealand this week. The levels have been pretty stellar. It's been a massive range, 71 to 73, essentially 72.95 is the actual high close for the year. But you can see essentially since the April pop here, that's all we've been doing. It's all we've been doing. So till we clear that range conditions abide. Here's what it looks like on the daily chart. So when I showed you this yesterday, guys, I was still working with this slope, right? This is kind of the gradient that we were working with on the way down. Looked like you had some decent parallels here. I don't know what that is, right? Topside break. I was kind of looking to see if we take it to the highs, just the highs of the year, converges on that same key level of resistance. So look, this thing is pretty simple. I don't want to get too fancy with it. It's still holding last month's opening range. This month's opening range high is at resistance. That's the February or the January high day close, major pivot in price, slope. And this is your key support. Nothing's changed about that. 618 of the rally off the low of the year. The 2018 yearly open is not, significant because it's yearly open, but you've seen some decent pivot action along that plane. And I'm waiting for a clearance here. Now the intraday chart gives us a little bit more color in that the downslope we've been working with off the high still looks pretty decent. And here it is. Here's what it looked like last night. So I'm still allotting the possibility for a test of this region, but this is the bearish invalidation level. Again, if we break the objective weekly swing lows, especially the May open, 71, essentially 70.93 is still that key zone of support. And that converges on slope essentially early next week. So look to see some exhaustion on the top side on Kiwi while below 72.65. Break of the weekly range lows, I think, opens up a nice pull back here if we get it. Questions on New Zealand? All right, those are the last three from yesterday. Here are the juicy pairs as we get into some more major event risk this week, starting off with tomorrow's BOC interest rate decision. So dollar CAD has still been, what can I say about this? It's still been kind of doing its own thing. Here's what it looked like back on the 6th as we were opening up on Sunday. I noted we wanted to see support right here. We actually got a pretty decent tag yesterday. 120.48 into 120.61 was the zone I highlighted to you guys on Sunday before the open. That's a basic low, high, low slope, right? And it's been a major pivot in price along this key region. Remember, let me just pull this back to the weekly chart. I'm sure you guys are sick of seeing this, but here's the weekly chart of dollar CAD. Ain't a damn thing changed. 2048, 2061. There it is on a weekly close basis, right? I mean, you can't make this stuff up. And we're still in oversold condition on the weekly. And that's why I've been so nimble, so hesitant to get involved on this. Like, if this does break 2048, guys, on a close basis, it's gonna, again, my humble expectation, not a trade recommendation per se, but I do think you get an accelerated drop. I mean, it's such a critical barrier of support. Lows from 2017, 50% retracement of the entire 2011 rally, the 2017, excuse me, I already said that low, but big zone. Here's dollar CAD on the daily. Weekly opening range, monthly opening range, pretty well defined. Resistance 2142. Last month's low, this month's low is just a hair lower, but I wouldn't really be paying too much attention to the stretches per se on this. You're in a key support zone, so something like that, 2012, you're done if that breaks. So looking for reaction. BOC's on tap tomorrow. Here's what the intraday chart looks like. If this slope holds, first of all, I'll be pretty impressed. But if it does hold, a topside breach of the weekly opening range, if we do get a break, look for this level. Like I said, this is just the objective swing highs that we've been making for the last couple of weeks. Let me move these markers over. Drop that one. All contingent upon this support holding. Now, if we get rid of this, just for argument's sake, and I just want to show you this because it's very much a possibility that we are still in some sort of contractionary wedge pattern, in which case if we do break lower, you could get hung up again into the 20 handle. That may be the case, but even if this slope has merit, if we do break to give you that drop, that's another 80 pips from where we are now. Not necessarily advocating for taking that position, but that's the buckle. If we do break here, yeah, you could go for a touch. My only concern is that this is only a 2-point touch. It doesn't really have any merits. Remember, any 2 points can make a trend line. Doesn't mean squat unless you get that third tag. So it's a range above support heading into a central bank rate decision. Trade it accordingly, guys. Questions on dollar CAD? BOC on tap. All right, dollar yen. I'm liking this one. I think Jamie put out a piece for this in his update last night as well. This is major levels here for dollar yen. So remember the major key resistance level on 109.92, 109.68. We talked about this yesterday in the webinar. I don't want to go over it again, but that's basically the whipsaw that you're playing off of, this major pivot in price. Huge level. Daily chart looked like this, very clean from like a consolidation. So how do I say this in a way that makes sense? The upslope here, forget this slope for a second. Here's a contractionary rising wedge. My concern about the immediate decline is this level essentially on that slope. Now again, only a 2-point touch, has no merit until we give it a third touch. But I just want to highlight that that comes in basically at 109, the big figure. So while we don't have any major fibs there and there's no major, monthly opens or high close or low close, I would give merit at least to the 109 handle on account of that slope. Here's what it looks like. Let me put that back. Here's what it looks like on the intraday. So all things held constant, that key resistance zone that we just talked about right here, here is what it looks like on the intraday. That's actually the weekly opening range high. Here's your weekly opening range lows, well-defined range, bullish inval 109. That's what will take you below the slope, swing low, and again, that converges with this red slope. If this is a consolidation level, again, you should see a pivot right at the 109 handle. So any way you slice this, it's the break below 109, in my humble opinion, that'll give you the go-ahead on the dollar yen sort of reversal trade. All things held constant, okay? It's important to note, we're still in the uptrend. We're still in the uptrend. So the decline off the high that we made last week is actually at risk right now into 109, okay? A strong reactor to US data for sure. So as you head into core inflation data on Thursday, and more specifically, obviously the Fed next week, I'm expecting a lot from dollar yen, but as it stands right now, that's sort of the focus as we approach uptrend support. Any questions on dollar yen? Okay, here is gold. And it's a tempting move here. I'm sure a lot of people are going to get ripped up here today. Watch. Here's gold first on the weekly charts. Just to take it from a top-down approach, again, we came off of pretty major resistance last week. That's 1909 to 1923. Big zone, 618 of the whole drop from last year's high. The high close from the record that we made privy in 2011. And the upslope, the median line. Perfect reaction. Really big pullback last week, although we did cover most of it on Friday, right? Most of the decline there. And this week is just a really tight range. So need a weekly close above 1923 to mark resumption of the uptrend. Key support, 1850. You got the 100-day moving average. I'm sorry, this is the 52-week moving average. So the yearly moving average. The high week close for the year made on January, right into the open. And the 25% parallel. All of it converge right here. Really clean levels. All you need to know for gold is 1850, 1923. That's it on a weekly standpoint, right? On the daily, it looks like this. Again, perfect tag of resistance, beautiful pullback, perfect tag of support last week, 236, basic retracement of the advance. We talked about the rebound, levels of interest, looking for resistance ahead of the monthly open. That comes in at 1906. Okay. That's all I'll say on the daily chart. Remember the trigger that we got last week, right? Here's what it looks like on the intraday. And again, don't forget that last week we did make that outside daily reversal candle that moved lower. We still haven't taken out that outside daily reversal high, which comes in just above the monthly open. So all things held constant, I've been looking for exhaustion here. I kind of got disappointed that that near-term slope we've been tracking broke to the upside. So here's what the gold trade looked like. By the way, dollar yen, no change to the dollar yen levels, right? We just talked about that. So we're right here. Actually, pretty stellar performance to start the week. That's what it looked like again into the open on Sunday. Here's what gold looked like into the open. And again, here is where we're at now. I was looking, ideal scenario, like I said, was failure into the yearly open. Now, I wouldn't call that a break. And in fact, it does look pretty exhaustive. It messes up our slope, but I don't want to just trash this just yet. Let's see how this pans out. The ideal scenario is you're probably going to get like a basic decent slope just using these highs. I mean, maybe even something like this. Possible gradient. I don't want to start getting too fancy with it, but end of the day, we've been looking for the exhaustive trade, and we'll see if that slope offers anything here. If we buckle back below this, remember the weekly opening range comes in right at that swing low we've been watching at 1882. Remember last week on both sides of 1882 when it broke, accelerated drop, breach, accelerated pop. That's the weekly opening range low. That's going to be our bullish invalidation level. If we break below that, I think you're on your way back for another drop towards 1860. Does that make sense? But bottom line, topside exhaustion in gold. We're looking on that. We're looking for that today. If we pop through the monthly open, let it run, all things held constant, we're at resistance. Weekly opening range is set. Okay, that is gold. Amen. Great to see you. Did you catch the gold setup? I just went over it. All right, I'm going to give a quick recap. She just came in. Resistance at the monthly open. Remember gold right into the weekly open, Iman. This is what I showed you on Sunday. We're looking for resistance into the yearly open. We got to probe through it. But here's the reaction we're getting. Now, I just want to again rewind everyone in the room the outside reversal day that we got here on the 3rd. If today materializes to an outside day reversal, just as a rule of thumb on a failure into the yearly open again, that would be pretty bearish. But all things held constant, you're looking for resistance, topside exhaustion while below the monthly open. If we get through the monthly open, you know, there's nothing to stop another run into resistance. And that's been pretty clean. All right, quick recap for you there. Sterling, number 8 or 9, I don't know, lost count. Let's take a look at what British pound is doing. You got 3-month GDP and the year GDP coming out later this week. Actually right into the close of the week on Friday. Here's what sterling looks like. So it's been a pretty clean intraday positioning. Here's what sterling looks like. These are actually one of the trades I liked best heading into the start of the week. The major resistance that we talked about last week, 2018 high close, 42.36. You got the 50% retracement of the entire 2014 decline, just higher, yearly high right there. We made an outside reversal last week. Okay, on building divergence, price action with a higher high, the oscillator not confirming that high. What's going on here? Well, here's the daily chart. Here's a really convincing outside daily reversal right into the open of June. June open has been resistance last week. In fact, we made another outside reversal last week off that same level. And here we are continuing to contract into the monthly opening range. Intraday chart looks like this. I don't want to get, again, I don't want to break it down too much on this, but the simple setup that I've been looking at with sterling, and here's what the update looked like on our last, still the same exact slope. That level held. We bounced into it, we rallied right into the 618, and that's resistance right now. This thing has been really clean. So there's no need in making this all complex, okay? It's a weekly opening range below resistance. That's it. That's it. Breach above 42, again, the objective monthly open, not Mike Boutros' opinion, not Jamie's opinion. Fact would put you back on the resumptive move. A downside break of the 25% parallel, in my humble opinion, would mark 40.89. And then, you know, ideally, I was looking for a drop into this zone, guys. But if you take a farther look out, if we're still holding this slope, I think it's prudent to, you know, kind of watch that median line as support before you head into this zone, or the lower parallel rather. So if we do break the weekly opening range low, yeah, you got a soft target in your 40.90. I'd still keep that, but something like this, 40.60 median line, and the upper or the lower parallel rather for the ascending move would be a level of interest. But that's all contingent on the weekly opening range, which is setting up right below resistance. Textbook setup. Keep this one powder dry on this one. Questions on sterling? All right, number 9 here is Aussie dollar. Aussie. Again, a clean slope. I can't say I'm a fan of the price action. I haven't been involved in this one as just as a disclaimer, as I really do want to be, but things kind of threw me off last week. Okay, we were breaking again below the yearly open. It held support into the weekly close. We actually closed higher on the week. Friday's rally kind of ripped everything apart. We're still in this limbo. Is this a break of a 4-point support trend line? You can even say 6, including these two, or not. Last week's rally failed right at former slope resistance. But is that enough? A break of that latitude should be a more monumentous drop than this. So I don't know, I'm a bit skittish here on Aussie. The yearly range has just been contractionary. Yearly open support at 77. That's been the same, you know, ball game for the last, what, 8 or 9 weeks? Maybe not that many. Yeah, right about 8 weeks. So until we clear this godforsaken range, I think we have to stay nimble. Here's what it looked like last week. Again, and this is why last week on that break, I got so encouraged. Not only did we break the yearly open, but we broke a 618 of the advance off the April low. And we closed below it. Lo and behold, Friday, you rip right higher. NFPs, whatever, right? Monthly opening range is set. I don't like this setup as much as I do Kiwi because we're not at resistance with the monthly opening range. Even if we break the monthly range highs, you still have that resistance. So again, unfortunately, a trade that leaves us on the sidelines. Flatlining in momentum on the daily chart isn't fun for anyone. Here's what it looks like on the intraday. The only thing that's the saving grace on this Aussie trade is this slope, which has continued to hold. Here's what it'll look like. Where was our last Aussie updates? Here we go. Here's what it'll look like back on the 2nd of June. Same slope. We dropped from here through the monthly, the yearly open, through the 618. But look what held. The median line. So right here. And then we ripped right back to the upside. We're at slope resistance today. So what does this mean? Does Friday's rally sort of just completely break down that decline? I don't necessarily think so yet. I think, again, unfortunately, I'm sorry if so many range trades, guys, and giving you all these things that are if-then trades, but that's where we are in the environment we're trading in. Right now, the weekly opening range is nestled up into resistance. I'll leave latitude for a possible swing to 77.72, which is last week's high. But essentially, if we are moving lower, we'd need to see exhaustion here, and we'd need to see a break below the yearly open to get the resumptive move lower. Questions? Again, Aussie data is pretty, there's no Aussie data of note for the week. So continue to take cues off the dollar there. All right. Last two on my list. And then let me know if you have any questions, guys, on your end. Bitcoin and SPX. Oh, Bitcoin. Every time I say the word now, it brings a smile to my face. And not because I'm like angst and I'm happy that it's moving lower. It's just because the technicals have been clear. I get happy whenever the technicals are clear, even if it's against my bias, because it tells us that we have a good fix on what's happening in price action. And after that breakdown that we saw last month, below 42,000, I think that was really, really big. And I told you guys the drop, we caught the low, better than anyone else that has been tracking this. And that was at really basic objective levels, namely the objective yearly open, 32,000, and the 1618 at the drop, that's 30,655. Remember, the more engagement, the more participation you get on any asset, the better the technicals work. And the more you hear about the masses getting in Bitcoin and your cab driver and your Uber driver and the smoothie guy in the corner and the guy at the taking my kid to the park, the parents at the park, everyone's talking about the more people involved, the cleaner, the more confidence you have in your technicals. And what we were talking about early in the week was this crunch. Okay, well, let me take you to the daily chart first. This is in log scale, don't forget. Pitchfork off the highs. We saw that break. We saw a break of meaningful lateral support. That break has been resistance ever since. Resistance, resistance. We just capped off and turned ahead of it last week on the pullback. Now, this to me looked like a consolidation structure, and that's what we were talking about late last week and even yesterday in the webinar. We're still in this triangle, lower highs, higher lows, look for a breakout, and we said 10% ahead of the apex. This is probably just ahead of 10%, but the break fueled what? An accelerated drop. That's exactly what you want to see. Now, if you go on Reuters or Bloomberg, they're going to say this is because Bitcoin dropped because US officials were able to find a digital wallet that was involved with the Colonial Pipe hacking and regain some of those funds back. And that kind of challenges the autonomy and transparency or whatever of Bitcoin. You can make that discussion all you want, my friend. That's fine. I'll stick to the technicals. I didn't need to follow that story. We broke support and it dropped. Right? What came first, the chicken or the egg? Whatever. So don't get caught up, guys. At the end of the day, no matter what anyone says, there are no true fundamentals in Bitcoin. It is all market sentiment. That's it. And that's why the more involvement you get from the retail sector, I think the better these technicals will continue to play. Bitcoin has gone through times, guys, where the technicals do nothing. Literally, it just invalidates support, invalidates resistance, and you're just in a slosh mode. That hasn't been the case this year. In fact, it's been pretty clean price action throughout the course of this whole drop. Next near-term support targets, you got the yearly open, or excuse me, the yearly low day close, again, 3205, and the 1618, 30,655. If we break below this, I know, you're crazy, Mike. That's another $10,000 drop. Well, that's what the technicals suggest, is the severity of a break below 3065. All right, so I'll leave that there for what it's worth. Pretty clean. Last but not least is where are we on the SPX? Continuing to press the highs, press the highs, press the highs. Haven't quite made a breakout just yet, but here's what SPX looks like as we head into the US trade session. So the record high comes in at 42.45. The pitchfork that we've been following off of the lows from May is still in play, okay? It hasn't been the cleanest, I'll grant you that, but I'm still working with this gradient for now. think that might be a decent slope, but let's stick with this for now. So look, the record high at 42.45 converges on the 75% parallel basically today. There's nothing above there from a previous price action standpoint. Obviously, it's the record highs, right? So you're in uncharted territory. The only measured move I have beyond that, oddly enough, interestingly enough, whatever you want to call it, brings into 43,000 or 4,300. So looking for a reaction here today. We need a record, we need a close, and a daily a breach and daily close above the record high at 42.45 to continue this advance. If today fails here and closes below, again, you would start to look and risk that exhaustion trade. With all the event risk on tap and core inflation just 2 days away, guys, be very cautious here. Be very cautious here, especially as we probe these highs. I think there's going to be a surge in volatility as we get into those inflation reads, and you should get some decent reaction here in SPX tomorrow, or on Thursday rather, when that print comes out. Any questions on SPX? Okay, that's everything on my end. Marcin, I was waiting for your list. Here it is. Swiss, you and the Swissy crosses, brother. You love the Swissy crosses. So let me hit dollar Swiss for you real quick. Here's what dollar Swiss is doing. Right, we're at a 786 of the advance off the low. I don't know how you interpret this. I interpret this as a false break. I was working with this slope earlier, but when you kind of consider that, it's the same gradient. We broke below the lows, broke below the highs. It still looks at risk. It looks like a false break on that side, a false break on this side, and the resumptive move is still lower. Now, I don't want to sell at the lows. I don't have a personal strong opinion what to do here. But if this is going to break 89.50, you know, you're basically looking for a stretch. Let me just take a step back. Here's dollar Swiss on the weekly chart. It's a mess. It's a mess. So if we break that 786, there's nothing until the yearly open, right, from a weekly standpoint. But it's been just such a dramatic drop. You haven't had any major recent recoveries. I mean, the biggest recovery that you have since the drop has been a 1% rally. So I don't know what you do on this, and I don't know if you chase Swissy's strength, Marcin. So I'm putting that on the table right before you start, right? So Euro Swiss is a trade I never touch. I don't even have it on, it's right there. 109.04, 38.2 of the rally. So a decent pivot zone here, right? The 2020 high, I was obviously the breakout zone that accelerated the rally here this year. We're right there right now. We're approaching that, 109.04. You got swing highs from here, the opening range highs for the year, the range highs for September. 2 levels of interest, Marcin, on this drop. Resistance at the monthly open. I would have that as my near-term bearish inval, 109.84. Interesting. It's the same situation though. On this one though, if Euro fails at the highs, right? It's the daily chart. Might be a decent play for Euro weakness to continue carrying this, even if the Swissy kind of finds a floor. Let's see what the intraday chart looks like, shall we? Not the worst slope. I would work with this for now. Just keep the basic channel slope. If you take, and this is just a quick trick, if you can't find a slope that works, take the 50% of the range and take the slope, whoop, right to the 50 level. So that's basically like your 50 mark, your 50 divider. Looks like a decent plane. Resistance, resistance, breakout, acceleration, support, kind of messy there. Support, 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 break below, resistance, resistance, resistance. 108.80 and 108.50 are still going to be levels that you're looking for on the downside. So, boom. And don't worry about, yeah, the Jan high would be pretty good too, but let's put the 618 there. There we go. There you go, Marcin. Those are the sort of the near-term levels I'd be focused on for that Euro Swiss decline. Very interesting. You sparked my interest here. I haven't really traditionally ever even tracked this one, but for your leisure, I'm more than happy to. There's a 618 at 109, 108.90, 2021 move. So just this year's move? I got that. Yeah. Oh, right on the 38 too. That's sick. So this year's move, that's actually the 50, the halfway mark of this year's move. 618 is at 108.50. So I'm not sure if there's a discrepancy there in the price feed. Oh, I'm sorry, I'm using the wrong low. I don't have my yearly open here. I'm sorry, guys. You're right. Yep, the 618 is right there. That's what happens when you don't have your charts properly oriented. So I always have my yearly open designated. Yep. Watch for a reaction there, for sure. For sure. Nice setup, Marcin. I don't mean to pick on you. I hate this trade, but no, the technical merits are definitely there. The other one you wanted to look at was sterling yen, the Widowmaker. Here's what she's doing, still resistance. Still resistance at the high day close, 155.50. It's been messy. It's been messy to say the least. Here's the pitchfork we've been working with since, I guess, since last year, essentially. No, since the look. Yeah, the uptrend resistance. I like this trade higher, generally speaking, but again, technicals are technicals. March and uptrend resistance. The high day close of 155.50. We did probe that a couple of times, and we actually did make a couple of daily closes above it. I'm not gonna lie, it's not what you want to see, but it just looks tired. It just looks tired. Look, 156.60 would be the breakout, my humble opinion. Scrap that at 88.6. Scrap that 100. Okay, so you're watching this for possible exhaustion. Intraday. Yeah, here's my concern with these trades. You know, it's a very strong uptrend. You get these lateral or sideways moves. This could just be a very simple bull flag. I don't know. I don't want to mess with it though. Which would put, lo and behold, the high day close once again in focus at 155.50 as possible slope and the high day close resistance. One more tidbit in case that wasn't enough. Where's the monthly open come in? 155.63. Oh, come on. Clear resistance here. Clear resistance here, margin. Watch for a move there. Last but not least, Swiss yen. Swissy yen. Swiss yen. Now that I actually do not have on my list. So let's look at what Swiss yen is doing. Hmm. So a very clean yearly opening range break, right? Which we broke back here in April. Classic move. Has you looking for a third, a late third quarter, fourth quarter high. Keeps the focus higher. The question is divergence into uptrend resistance enough to turn this thing on its heels to give you a decent pullback? If it does, I bet you a 236 would come in at a pretty sweet spot like this. So that's like sort of the risk of a broader correction. It's really far from where it's 200 pips from where we are right now. But higher high in price, higher high in price, higher high in price. None of those highs marking in the oscillator. That's all divergence into the highs. Now I happen to favor a yen strong move on a rally. So if dollar yen rallies, I do want to see a downside break, which would give us more of a conviction trade for the trade you're looking at here for a downside move. Again, my hesitancy is the yen, is the Swissy. Stop against the highs is the only way I'd play this if you're willing to. It's like a 50 pip stop from here. But let's see what the near term chart looks like. No, there's nothing here from a slope standpoint. That's the only slope. That's the only slope I'd work with off the yearly low. So it's this. It's this. And within this, you want to look for where the corrective bounce could sort of break. And that's where the ideal scenario, which you're not going to get here, is some sort of slope off the highs. I mean, what's that? Is that a break? I don't know. This looks like consolidation, actually. Could be a play. I don't like it. You know what I mean? Watch 122, 122.09. It's a 618, 1618 extension off the low. You've seen some pretty decent highs there already register. But this would need to fail ahead of 2250, the yearly high, if it's going to move lower. If we break, like I said, I really don't have any meaningful support until that slope. So you're looking at like a larger decline pullback. Interesting setup. I'd be cautious on it, margin. Does that help? Offer a little clarity? Now, if we get really granular with it, one other thing I just want to check. Sometimes these correct real quick, and before you know it, 100's already kicked, and the thing's turning higher. So I just want to see. No, we didn't quite make it there yet. Look for a daily close out of this range right here for guidance. He says, thanks a lot. Hey, you're more than welcome, Marcin. I'm always playing about these weird off one pairs, but when the technical clarity is there, like I said, I don't care if it's seashells. If there's volume and the technical clarity is there, let's get involved. All right, guys, so I'm going to wrap it up here. Remember, again, BOC's on tap tomorrow. Dollar CAD's really in focus. You got a lot of US stuff, a lot of CAD stuff, and this thing is sitting at major support, straddling the support structure with the monthly opening range all around it. Look for some sort of clearance here, some sort of clarity here, whether it's a break of this pitchfork or whether it's a break of this consolidation level heading into the BOC tomorrow. And I will see you guys here on Thursday morning, heading right after the ECB decision as we head into the core US inflation number. Hopefully we get a kick on some of those dollar crosses. Best of luck trading. Eman says, thank you, Michael. Literally amazing setups. My pleasure, man. They're not my setups. It's the markets. I'm just helping you find them, guys. Have a great day. See you all on Thursday. Cheers.